we're bearish the US dollar, but not massively so, I must say. The key risk for us is not really the Fed. I think the Fed has fired most of its ammunition. We're watching the US presidential election very closely, though, and not particularly because of who might or might not win, but rather the risk of a disputed or a contested or a delayed outcome that could really upset the US dollar and lead to several weeks of uncertainty afterwards. That's the key risk. And even though we saw a strong payrolls report on Friday, I think it's too soon to start buying back dollars here, given that risk is not going to go away until November the 3rd at the very earliest.
To what extent do you think that risk of a contested election has already been priced into the Forex markets, or are investors still a bit complacent on this front?
Yeah, so spot FX is notoriously a short-term investment instrument. So I would be surprised if it's been priced in with still almost 2 months to go before the election itself. So I think there's still quite a lot of dollar weakness to come through, especially if we start to see the polls, the gap between both candidates close in the dying weeks of this campaign. So we could certainly see euro-dollar back above 120 in due course, and Aussie-US will probably once again approach 75, and this time probably hit it in the weeks ahead, in my view.
Hey, Gareth, this is Christine. I mean, as Abe exits, there's been a lot of chatter, a lot of talk about maybe dollar-yen could hit the psychological 100 level. What's the possibility of that happening?
Oh, I think we're going to get close, all right, but not all the way to 100. 102 is our target for immediately before and immediately after the US presidential election. You might remember back in 2016, dollar-yen was where the movement was when the US presidential election result was announced. And we'd expect to see that play out again once more this time, with the added element this time, as you point out, that Prime Minister Abe is on his way out of office. Now, he is, of course, the Abe in Abenomics, and Abenomics, in large part, was responsible for driving dollar-yen from 75 to 125. So if you take away the key character behind that, naturally some dollar-yen weakness should ensue. Now, I would stress, though, that Kuroda was very much the key protagonist in this. So he will still be hanging around. He's not going anywhere. And that should prevent dollar-yen falling very sharply to 100 and below. So I think we'll stop at 102, at which point demand for dollar-yen from Japanese real money investors will rematerialize, and that will provide some support.